Think about the last time you asked an AI tool to write an email, summarize a document, or make an image. The answer felt instant, but somewhere in a data center, a computer had to hold a lot of information close to the processor at the same time. SK Hynix sells the memory chips that help make that possible, and this is the cursor stocks. You probably don't buy SK Hynix products off a shelf. Almost nobody does. But its chips can sit inside phones, laptops, servers, and especially the big AI machines that need fast memory. So the central question is simple. Is this a long-term AI build-out story or a hot chip cycle that can cool fast? SK Hynix started life in 1983 as Hyundai Electronics, then became part of SK Group in 2012. Today, it's led by CEO Kwak No-jung and based in Incheon, South Korea. That history matters because this isn't a tiny startup asking Wall Street to believe in a sketch. It's a giant manufacturer coming to U.S. investors. Here's what the company actually does. It makes memory, which is the part of a computer that keeps information close while the machine is working. If storage is the closet, memory is the work table. AI needs a huge work table because the computer is constantly moving words, images, and patterns around. The special buzzword here is HBM, short for high bandwidth memory. Don't let the name scare you. It's memory stacked in a way that lets data move very quickly, which is useful when AI chips are trying to answer your prompt without waiting around. SK Hynix has become one of the names investors connect most closely with that boom. The money engine is straightforward. SK Hynix sells chips to companies that build electronics, cloud servers, and AI systems. When demand is strong and supply is tight, memory makers can charge more. When demand weakens or too many factories come online, prices can fall hard. That's why this story is exciting, but not calm. The listing is set for July 10th on the NASDAQ under the ticker SKHY, the short stock market nickname people use to find a company. The offer is still pending, and the final price, share count, money raised, and IPO valuation are not set yet. That missing price tag is important because investors can't fully judge the deal until it lands. Usually, an IPO is the moment a private company starts selling pieces of itself on the stock market. This one is a little different because SK Hynix already trades in South Korea. For U.S. investors, the practical story is a NASDAQ ADR listing, meaning a U.S.-traded receipt tied to overseas shares, making the company easier to buy. Why go through this at all? A public listing can raise money, widen the investor base, and make a company more visible. In SK Hynix's case, reporting on the filings points to factory expansion and advanced chip-making equipment. That ties straight back to the AI prompt you typed. More demand means the company needs more capacity. The growth story is easy to see. According to reporting on the company's results, revenue jumped from about 66 trillion Korean won in 2024 to about 97 trillion won in 2025. Revenue is the money coming in before expenses. That kind of jump tells you AI memory didn't just create hype, it changed the size of the business. The bull case starts with demand. AI companies are building more data centers, and those machines need fast memory sitting close to their processors. If your AI answer needs a bigger work table every year, SK Hynix is selling one of the parts that makes that possible. That's the cleanest reason investors care. The second bull point is timing. SK Hynix hit this NASDAQ moment after a very strong run in AI memory, not while begging for attention in a weak market. According to reporting, its first quarter of 2026 brought in 52.6 trillion won of revenue and 37.6 trillion won of operating profit, which is profit before some later accounting items. But here's where the story gets more interesting. Memory chips are famous for cycles. Customers order aggressively when supply is tight, then pull back when they have enough. Factories also take years and huge spending to build, so companies can accidentally create too much supply later. A great business can still have rough timing. The financial reality is stronger than many IPO stories. According to filing figures cited in reporting, SK Hynix had about $63.8 billion of 2025 revenue and about $28.2 billion of profit. Profit is what's left after the bills are paid. So this is not a tiny loss-making dream. It's a profitable giant asking U.S. investors to join the ride. That doesn't remove the risk. A profitable chip company can still disappoint if investors expect perfection. If AI spending slows, if customers push for lower prices, or if new factories arrive just as demand cools, profit can shrink quickly. The question comes back again. Is this a durable AI buildout, or the peak of a hot cycle? Competition is simple to understand. Other companies want the same customers' money. Samsung and Micron are the obvious memory rivals, and they aren't standing still. In this business, leadership can shift when one company has the better product at the right moment. SK Hynix has momentum, but momentum has to be defended. Valuation is the price tag investors put on a business. For this listing, that final IPO valuation has not been set, and that matters more than it sounds. A wonderful company can be a difficult stock if the starting price already assumes years of perfect execution. Until the price is known, the smartest answer is patience. The use of proceeds is one of the most beginner-friendly details in any prospectus. It asks, who gets the money? According to reporting on the filings, this deal is aimed at funding fabs, packaging plants, and EUV chip-making tools. That's more like putting money into the factory floor than simply handing early holders a payday. After it lists, watch 3 things. First, whether AI customers keep buying more memory. Second, whether profit margins stay strong, meaning the company keeps a healthy slice of each sale. Third, whether factory spending turns into useful capacity instead of too much supply. Those signals matter more than one exciting opening day move. So the balanced verdict is this. SK Hynix is a real, profitable, important company sitting close to one of the biggest technology trends in the world. The doubt is that memory chips can be brutal when the cycle turns, and the final IPO price is still missing. The dream is big, but the price will matter. Circle back to that AI answer on your screen. You don't need to know every chip term to understand this IPO story. SK Hynix sells fast memory. AI demand is pulling it higher. Rivals are chasing it, and the listing price still has to make sense. Follow the cursor stocks for IPO stories explained before they trade. This video is for information and education only, not financial advice.